Welcome to another edition of our Money Talks videocasts. I'm Jerry Slusiewicz, your host. It's Friday, March 19th, 2010. We were talking about the markets having a potential double top condition last time. That has been alleviated as the market broke up to the high side earlier this week. The Federal Reserve met on Tuesday and announced that they were going to keep interest rates low for an extended period of time. What that means is they're going to keep cheap money or free money available at 0 to 1/4% interest rate for institutional investors. Really helps them. The individual investor is not present in this market rally. The Dow prior to today has been up 8 days in a row. The S&P 500 index, ETF, SPY, has been up 14 days in a row, albeit on lower and lower and lower volume. Does volume matter? I think it does in the long run. At some point in time, if the wind blows in the wrong direction, we'll see volume increase. If the price changes direction, it'll be very quickly to the downside, or again, it could potentially melt up, although I still can't understand what the catalyst would be for a melt up, as it just kind of seems to trudge away. It was very interesting when we did break 1151 on the S&P to not see it rise very quickly on high volume, thinking that maybe some short sellers or people that weren't participating in the market would come back in very quickly. That did not happen. So again, what we're seeing is a slow claw upwards on a lot of news that can really kind of go either way. I still think that the dollar-euro equation is very, very important to the markets, whether it's the stock market, bond market, commodities, or precious metals. And Greece kind of is the linchpin behind all that. I just wrote an article on my website, www.yourmoneytalks.com, called Spring is in the Air. Go to that and please read that. But basically, the premise is that if the Greece issue is resolved favorably, it's been dragging on for some time. Now it's put out to March 25th and 26th, and the euro starts to get stronger, the dollar could go down, continuing the ascent of the market. I mean, the bottom line is this price of the market is going up. It's important to participate to some degree, but be ready to exit. The higher we go, the more rarefied air we're in. The markets are extremely overbought. But they can remain overbought for a long time, whether you're looking at the New York Stock Exchange Summation Index or whether or not you're looking at the McClellan Oscillator. On all indications are that the market's overbought. But again, things could remain overbought or oversold for extended periods of time. The news is not great. The economy is not great. Any bad thing can knock this market off the perch, but we have broken out from the double top condition. If things go perfect, we could see 1200, 1250 on the S&P. If there's some negative news, we could get that pullback that we've been waiting for. At some point in time later this year, we will have to cross that river. Whether we have a bridge to cross it or we fall off the cliff and then have to swim across remains to be seen. I think that there's still a lot of trouble out there. Use stop losses. If you want a free, no obligation portfolio review, call our office toll free 800-449-9501, or on the web look us up www.yourmoneytalks.com, and we'll keep you updated with more videocasts as the time warrants.